Hi everybody, it's Mark here at Teslary, and Tesla closed red today. Its closing price was $255.70, which was a drop in share price of $6.89 or negative 2.62%. Now, this was pretty anticipated, but during the course of the day, and if we just want to look at the action real quick, and I need to kind of make this a shorter video just because I'm losing my voice making all these videos lately. So I need to kind of cut this one short, which might be a benefit for a lot of people watching. But we had kind of a nice outperformance during the course of the day, where it was getting to the point of getting into the gap. When it gapped down, it sold off pretty hard and kind of recovered until 1 o'clock in the afternoon. But yeah, I was thinking that this would have been, a great kind of seasonality play where we talked about the S&P 500 would kind of drop going towards the end of the month and Tesla would be more flat. But unfortunately, as the day closed out, Tesla sold off pretty severely. This was a 2% move, I believe. What was this? Yeah, this was a 2% move down, or $5 a share towards the end of the day when everything else was selling off as well. And the only consolation is that, we were having a nice outperformance, and we had a pretty bad day, 2.6%. But as far as kind of a pattern goes, we didn't make a lower low within the day's trading, where all the other stocks were making lower lows and the index was making lower lows as well. But if you can see on here on their chart, we were, kind of putting the lower EM, or the lowest estimated move for the week, kind of at the $255 mark. And you can see how it was trying to make a support, trying to support itself at that price. And it kind of touched a couple times. Usually not a really great sign though, even though it's like cool, like, our level is working and we're finding support. Doesn't necessarily mean that this is a really good pattern for a bottoming process. This doesn't really look like a bottom to me. But of course they never do until they're not, right? Like, to be honest. And then first of all, let's clean up the chart. We don't need all these. This trend broke. The green thing is not working anymore. We can get rid of that, all the green stuff. Make this a little bit cleaner. And we'll get rid of these lines. I don't need that one. We kind of anticipated that. But what I wanted to say is that, just from a kind of a day trading aspect, or just a way to kind of gauge entries, I just want to show that, the horizontal lines are very important. Sometimes more important than the diagonals. Diagonals can be really invalidated quickly just by a couple of days of ranging or basing, where then it doesn't actually, when the sideways movement kind of just kills the whole idea of like, oh, I'm in an uptrend or I'm in a downtrend. And Tesla likes to range. And we can see that here. Tesla can get really rangy, invalidating a diagonal trend line. So the horizontals is what I want to point to. The horizontals are actually acting pretty well. Like you can see here from the peak of pricing here, that kind of acts as an open spot. The opening price for the gap down. It's also the resistance for the bottom of the gap. And you can see how these other peaks in pricing from the kind of like the wedge action we had from a couple weeks ago, it's kind of relevant in the pricing still. There's a little bit of memory there. It's not perfect, but what I guess it's even more important is the $5 increments of pricing. 260 is becoming kind of like a level. It always has been, obviously. And the 255, it's kind of bouncing around there. But from the looks of this, if I was to anticipate further movement, if I see more weakness tomorrow, be it a gap down, be it selling in the morning, I wouldn't mind taking a stab at 0 day to expiration puts just to kind of be on the safe side. I closed out my puts today. I'm not saying that's the best idea. And good thing this is after the close, so you can't listen to me and close out your puts if you are hedged. I'm just saying that's what I did because I wanted to at least give myself an option of, taking profit on those hedges if there was to be some type of bounce. If not, at least I have the volatility tomorrow of a 0 day to expiration option, which could be a life-saving event if you are very heavy Tesla and the market sells off, because Fridays are great for single tickers and hedging. It's not always great, though, to carry the hedge into next week unless you have good duration on that trade, because even on the first day of Monday, what we talked about it before, carrying an option into Monday, you probably need to have like a 1.1% move just to break even. And 1.1% move on Tesla could be like $100, even more than that. It could be like $200 for a batch of 100 shares. So it's something you kind of have to weigh, or sometimes it's actually better to carry just even like the inverse ETF, like TSLQ, over the weekend, kind of calculate how much you're willing to lose based off, like, if you had an option, how much data you would burn. And you can kind of adjust the quantity of TSLQ that you can carry going into Monday, selling it pre-market or whatever you want to do. But if I was the market makers, if I was, money managers, if I'm trying to get a short in this, I would kind of do this to the stock. I would, everyone knows Tesla has heavy volume on options. You really got to mess with people, but also at the same time, you need to position yourself for a move. If you are pretty long Tesla, if your fund has a lot of Tesla and you want to protect some downside, you kind of want to pump the price a little bit, get some really cheap puts going into tomorrow. I always talk about Thursdays being a setup for Friday. I'm not sure which direction that is, but the options are much cheaper, as you know, with 1 day to expiration, and you can have a big gappy move. We've seen some gappy moves over the past couple of days, so that wouldn't be out of the question. I mean, it's gapped here, it's gapped there, it's gapped there, 3 out of 4 days. Yeah, it's pretty gappy right now. So, but we talked about the weakness in the market, and we'll get off Tesla for now. I just think that tomorrow you need to kind of look out for the certain levels. What every $5 increment to the downside, currently 255, 250, and gap fill at 248 would be all in play. And in a really sharp movement to the downside, if meaning that we're talking like if the market just starts crashing, at least you have the opportunity to get in some cheap plays if you are actively trading. And I mean, there's not much else I can say other than if you see some green, kind of be wary of the green, but embrace it. Why is that? Well, let's look at the S&P 500 and look at maybe like a daily time frame. We'll go from the big time frames down. So daily, we'll go to the hour next. We're looking very oversold. So let's go look at the RSI. I'm going to expand the RSI real quick. Now, this is the daily time frame, okay? And we haven't seen RSI this low, okay? Since when? Not since the sell-off last year in 2022. Even the March sell-off doesn't have a lower RSI on the S&P 500 on the daily time frame. So when we bottom in October, that was the only time. Was that October? Yeah, in October, that was the only time we saw RSI levels this low. It's getting really oversold. We're also obviously oversold on the stochastic on the daily. Let's go down to the 1 hour, another time frame, and you can see on the hourly, if you can see how red our RSI is being shaded in, and you don't see it anywhere since the spring, maybe? Since maybe the spring. Yeah, like we're talking April. We're talking March. So we're really oversold on the RSI. The MACD is just going into nowhere's land. It's looking pretty bad, but looking pretty bad has to stop sometime. Now, I would say though, that it doesn't mean it can't sell anymore. Don't think it can't sell. It can sell as long as it wants to. But there's got to be some relief eventually. But it doesn't mean it has to happen tomorrow. We got to a pretty significant level where you're kind of at a neckline, or at least the left part of the neckline for the head and shoulders pattern. Like if you think this is a head and shoulders, what would it look like to you? It looks like that, looks like that, looks like that. This is your neckline. We'll just do a diagonal. Boom, boom, boom. You kind of fall below it. So the angle is showing that you're actually completing the head and shoulders. It's kind of done already. So you're kind of in that kind of topping pattern. You're in that more of a bearish pattern. You're in the midst of it right now. Levels you want to watch is I think we're going to look at some of because we still have the FOMC things highlighted. So we're going to look at some patterns. We talked about it before yesterday. We said, we're going to have typically continued weakness the day after an FOMC sell-off, and the weakness would look like a gap down. Even a gap up will eventually be sold off from what we saw just historically. Okay, so levels you want to watch on the S&P 500 of 425 and 428 is probably 429 is probably what you want to look at. But the thing about that is it's not that far from where we're at now. It's only 0.5% move to that level to 429. And as far as going over to 425, it's 1.3%. And you can probably do that in a day. Then you can probably scare people into gap fills over at 422. No one wants that. But if that's the case, you'll see based off of the tickers, the downside can continue for quite a while and not so great. Let's go over to like a 5-minute time frame. Let's look at the shaded areas of FOMC where we had some continued weakness. That was a gap up. This was during a bull market. And you can see how on this day, you had the sell-off, you had the gap down, and then you had a base because it was getting to the point where it's getting really oversold. And you can see that here, very, very oversold on our side. Ooh, it looks really bad. I forgot what day that was. The 2nd of May? What was the 2nd of May? I don't remember. Is that the CPI thing? Anyways, so then you had a basing that lasted a day. Okay, this was a day, a gap up on Friday. So it was a sell off on the CPI, gap down the next day. Then it based after selling, but kind of closed red still, didn't get into a gap close. did kind of the same kind of thing that Tesla did. It went up to the bottom of the gap, sells off to the rest of the day. And then the next day it gapped up considerably and it kind of went flat for a week or two. Okay, go to the next one. Let's see here. This one had a sell-off that did the 50% move up for a gap up and continued to sell. That sell lasted 1, 2. That kind of was like 2 days of selling with a slight buy towards the end of that Friday, I guess. So there's a slight kind of like movement up on Friday. You can kind of hope for the same thing tomorrow, but I wouldn't count on anything in particular. Just be ready and just be thankful that Friday can give you some cheaper entries due to the options expiring that day. Don't throw too much money away though, guys. This was a move up, so we won't really talk about that. Let's see. Let's keep looking for our FOMC highlighted areas. Let's see. Oh, this is a sell-off. Okay, so this is the one that's kind of relevant. This was like a sell-off that gapped down the next day, and then it gapped down again and sold off for about 2 or 3 more days. So it's very possible that if you get another gap down, you might have a small chance to enter in a put, thinking that it will go down even more. It could close the gap. Guys, just be careful of that. But if you need the hedge, you got to kind of take it when it gets those small retracements to the upside. You kind of need to take it sometimes because you're so long Tesla, right? You're very long. Here's another opportunity. Let's see. This is November. It was a sell. Yeah, this was all on the Wednesday. Okay, it went up, went all the way down. It gaps down like we gapped down today. This stayed flat, sold off at the end of the day. So it kind of did close even lower than the gap down. And then the next day, what happened the next day? That next day, gap up, sell off, move up, and then move all the way back down. That's a brutal trade. I can't even imagine. So it kind of closed. That's 2 days of selling. Let's look at the next one. Is that going to be September? Yeah, this should be the September one, right? Okay, so this is September one. This was a sell-off, very slight gap, flat for the rest of the day. So the next day it gapped down again as well. So it was a sell on the second day after, on the day after FOMC. It sells again into Friday. Has a close where it finds a little bit of buying, but still very red. And it sells again on Monday. It sells again on Tuesday. Has a relief on Wednesday and sells for a couple more days. So just kind of be aware of the gappiness that's going to be happening after FOMC. Before we close out the video, actually, let's look at other indices real quick. And you can kind of see, this is kind of interesting where this is the NASDAQ. And that NASDAQ was actually holding better than the S&P 500 was. S&P 500 looked very weak compared to the rest of the indices, which is really interesting to me because, typically you wouldn't think that S&P 500 would be as volatile or more volatile. But look at the pattern, look at this severe selling. It was just like a straight diagonal line down. The Qs actually was trying to hold a base longer than the S&P 500 did, closed pretty bad at the end of the day as well, though. You'd be kind of surprised looking at the IWM, which is representing the Russell 2000. It actually had a kind of like this kind of triangle pattern during the course of the day. It had a breakout of the pattern and then it sold off for the rest of the day, but still didn't have lower lows like the S&P 500 did. And you would think this would, because this would be so much more rate sensitive, but it has sold off more in the recent days than the S&P 500 did. We'll take a look at Tesla again before we switch to the browser to close out the video. Tesla's not looking so great. It sold off about $2 after hours. It was at $253 and something cents. So it's actually looking kind of bearish just from, people coming home and wanting to get out of the stock. That's basically what it means, right? It looks, kind of head and shouldery in a certain aspect. But what you're hoping for is that you can get some type of entry for some type of hedge going into tomorrow. It might be helpful. And we can only hope that something good will happen, but we're going to look at the news and maybe things won't be so great because all the Fed speakers coming out tomorrow. Who knows what they're going to say? So first things first, going over the data drops for today. Initial jobless claims unfortunately came in again a little bit tighter on the jobs market. Not as many people applying for unemployment. Philly Fed is just cratering. The manufacturing survey is cratering. The lean economic indicators, slightly better, but who really cares? Homes, not as many sold. Got it. Understood. No one can afford a house. So tomorrow we're going to have a speaker before the market opens. We're going to have PMI after. You'll have 15 minutes to react to PMI after that. Okay, so at least you have 15 minutes from that particular data drop to maybe get in a position. Usually the market won't let you get a good position for that situation though. Then we have a couple more people speaking throughout the day, so expect volatility from these people, probably talking very hawkish and trying to keep expectations of cuts basically to zero. What about the seasonality? Let's look at seasonality real quick so you can see. So we're getting into the end of September and it's basically fun. This is S&P 500 first. S&P 500 is showing you that it's going to drop considerably. It's going to drop maybe like 2%. And it's of course more than 2%, but this is just an average. And that selling won't see relief until the end of the month or into the beginning of next month. And then it'll sell off again. And we've seen that actually happen. I mean, we actually saw that happen just last year where it was a sell-off from into the end of the month, and it had a 6% move to the upside for October and bottomed again. It bottomed out in October at a lower low, and then it went back up. So seasonality is playing out to a T, not too surprising. We talked about this over and over and over again for about 2 weeks now. So I hope everyone is being, at least hedged the whole time we've been talking about it. Tesla, we were hoping for a little bit of more of a stability in the price compared to S&P 500. Usually you can see here at the end of the month, it would actually be stronger than the actual indices, but it wasn't really, and actually moved in the way the beta would expect it to move. If the QQQ is down 1.6%, 1.7%, Tesla being down 2.6%, that actually makes sense. Unfortunately, it happened. So overall, the market's looking really, really bad. Yields are going crazy. We don't even know where the yields are going to stop. There's really no idea of when those yields would stop, but we can only hope it's tonight. All right, guys, thanks so much for listening, and have a good night. Bye.